Hey, welcome. Today we're going to dive into one of the most powerful tools for any trader, the candlestick chart. If you've ever looked at a financial screen and just seen a big, confusing jumble of red and green bars, you are in exactly the right place. Because by the end of this, you won't just see bars anymore, you'll see a story, the market's story. All right, let's just jump right in. Take a look at this chart. Now, for most people, this looks like complete chaos, right? But what if I told you every single one of those little shapes is like a word, and when you put them together, they form sentences that tell you exactly what's going on in the market? Learning to read this, it isn't magic, it's a skill, and we're going to start building it right now. You know, this quote just nails the whole idea. Think of it just like learning a new language. The candlesticks themselves, that's your vocabulary. Each one tells you about a tiny battle between buyers and sellers. But to understand the full story, you need the grammar. And that's the context, right? The key levels on the chart where the really important stuff happens. Okay, so let's learn our very first word. Each of these candles represents a slice of time. Could be a minute, an hour, whatever you set it to. The thick part, the body, tells you the opening and closing price. Super simple. If it's green, the price went up. If it's red, the price went down. And those thin lines, the wicks, that's the drama. They show you the absolute highest and lowest the price hit in that time. So in one little shape, you get the entire story. Now, as soon as people learn these basics, they almost always, and I mean always, fall into the exact same trap. They start seeing these cool-looking patterns all over the place, but they completely miss the bigger story, the actual plot. Let's dig into what that looks like. So here's the mistake. A beginner learns about a pattern, maybe something called a hammer. They see one on the chart and think, hey, the book says that's a buy signal, and they jump right in. But here's the thing. A pattern by itself is totally meaningless. It's like hearing one word shouted in a massive crowd. What does it mean? Who knows? Without the rest of the sentence, you have no idea, and acting on it is probably the fastest way to get burned. And I absolutely love this analogy from trader Rainer Teo because it is just so perfect. That little buy pattern you just spotted, that's the Toyota. But the massive, powerful market trend that's been barreling down all day, well, that's the freight train. And trading a teeny little pattern against a giant trend is a collision you are just not going to win. So, how do the pros avoid getting run over? Simple. They flip the whole process upside down. Before they even start looking for a pattern, they figure out their location on the market map. They find the context first. And this right here, this is the whole key. It's a total mindset shift. The pros, the legendary traders like Al Brooks and Steve Neeson, they teach that context is everything. The pattern is secondary. The exact same candle can show up at the top of a huge rally or at the bottom of a major dip, and where it appears completely changes what it means. So what is this all-important context? Well, it all starts with finding what traders call areas of value. And it's actually simpler than it sounds. Just think of support as a floor. It's a price level where, in the past, buyers have repeatedly shown up and said, nope, the price is not going any lower. And resistance is the ceiling. It's where sellers have repeatedly slammed the brakes and pushed the price back down. These are the battlegrounds. This is where the story gets really good. All right, so only after you've mapped out your floor and your ceiling, then you start zooming in on the candles themselves. Now, you're not just looking at random words scattered all over the page, you're listening for specific conversations that are happening at the most important places. This slide just captures the entire idea perfectly. Look on the left, you've got a bullish-looking pattern just floating around in the middle of nowhere. That, my friends, is just market noise. You should completely ignore it. But now look at the right. The exact same pattern shows up right at our floor, that support level we found earlier. All of a sudden, it's not noise anymore. It's a powerful signal. It's the market telling you, hey, the buyers are showing up to defend this level, just like you thought they would. Location is what turns noise into a signal. And here's the best part. This is the thing that's going to save you so much time and headache. You can forget trying to memorize dozens of crazy pattern names like 3 black crows or dark cloud cover. It's totally unnecessary. The pros, they don't trade by memorizing patterns. They trade by understanding the simple story of the fight between buyers and sellers. So, how do you read that story without a dictionary? Rainer Till gives us this brilliant 2-step framework. First, look at the closing position. Just ask yourself, where did the candle close? Near the top? Okay, buyers are in control. Near the bottom? Sellers are winning. That's it. Second, look at the candle's size. Is it a huge, powerful candle compared to the ones before it? That shows strong conviction. Is it a tiny little thing? that shows indecision. Those two questions, they'll tell you pretty much everything you need to know. Okay, so we've got our location, we've got our signal, but there is one final piece to this puzzle. And honestly, for any new trader, this might just be the most important one of all: the discipline of patience. This is such a crucial rule, you have to burn it into your brain. A candle can look like the most perfect bullish signal you've ever seen for 59 seconds, and then in the very last second, sellers can flood in and completely change its meaning. So remember this: a pattern is just a potential setup while it's forming. It only becomes a real, confirmed signal once that time period is over and the candle is closed for good. So why is waiting so important? Well, it's your shield. It's your number one defense against false signals and those emotional, impulsive trades that we're all tempted to make. Waiting for the close is the final piece of evidence that confirms the whole story. It proves that the buyers didn't just pop in for a second, they actually took control and held their ground until the bell rang. So let's put it all together. Here is your simple 3-step framework. 1. Context. Find your floor and ceiling first, don't do anything else. 2. Signal. Watch those key levels and look for a clear story where buyers or sellers are obviously taking control. And 3. Confirmation. Have the discipline to wait for that candle to actually close and validate the signal before you even think about making a move. And this is the question I really want to leave you with. From now on, I want you to challenge yourself to stop hunting for textbook patterns. Instead, start by finding the most important locations on your chart, and then just listen to the story the candles tell you when they get there. It's a fundamental shift, but it will completely change how you see the market. And that's our deep dive into the foundations of reading candlestick charts. By focusing on context, then signal, then confirmation, you can really start to move away from just guessing at shapes and start making informed decisions based on the market's own language. Thanks for joining me.